Wash trading is a different beast, though. The intention of wash trading is never actually good. So it's always there to mislead or misrepresent something that's happening. So there are a number of exchanges, and I don't want to, it's not right to name names, but there are a number of exchanges that are kind of generally known for encouraging or facilitating wash trading. And the reason they do that is actually kind of interesting. So they try to boost their volume numbers. So wash trading is basically you trade against yourself. So I put in a buy and a sell at the same exact price. It looks like a trade happened, but actually it was just me on both sides, so nothing actually happened.
Dear crypto community and blockchain buddies across the globe, welcome back to season 2 of Cryptonites, the no BS blockchain channel built with the community, for the community. And tonight we have another timeless interview with the head of business development at Kraken Futures, Kevin Beardsley. A pleasure to have you, Kevin.
Thank you very much.
How you doing, my friend?
Yeah, doing well, thanks, doing well. I appreciate you having me here tonight.
It's awesome to have you, and especially in this interview, we'll talk a lot about some technicals regarding to crypto finance and some really interesting stuff. So without further ado, Kevin, you have an incredible career in this space, kicking off in 2014.
Yeah, so I was the director of membership at the Bitcoin Foundation in 2014. So spent about 9 months there, and that let me meet a lot of the community.
That's awesome. You must have jumped through a lot of hoops going through, or did you have any struggles going through these years? Or?
Yeah, it's been a wild ride. I remember sitting in meeting room with some large custodian banks, and we were trying to convince them that Bitcoin could be a $100 billion asset class. And they looked at us and said, there's no way. And they said, what makes you think it could be? And we didn't have an answer. So, I mean, that was only 3 or 4, maybe 3 years ago. And it was still inconceivable that it could get to the level it is today. So it's been a really exciting ride.
Yeah, and talking about rides, obviously it's a very emotional ride for many people. And people, when there's a bear market, they tend to give up or capitulate. And what deep inside of you, Kevin, made you think, oh, I believe in this. I believe in Bitcoin. Was there something in particular that kind of just led that force, to?
Yeah, I think it's a bit corny to say these days, but I actually really like the technology. So I like the way the incentives are aligned so that everyone can act with their own self-interest. So miners, exchanges, developers can all act with their own self-interest. But as long as things are broadly in the right direction, the system will sustain itself. And I think that's really fascinating. So I try to be involved in the technology as much as I can. I mine cryptocurrency in my spare time. I've run nodes of Monero and Lightning Network nodes. So I try to stay involved in it as much as I can. I find it fascinating.
That's cool. So not just investing, but actually using the technology and being a part of the ecosystem.
Yeah, absolutely.
That is awesome. So there's one thing I really want to ask you, Kevin. Obviously, you're working at Kraken Futures, and futures in general is quite a complicated topic.
Yeah.
So if my grandma Susie was here today, how would you explain a futures contract to somebody in layman terms?
Yeah, and it was a new concept for me as well. I don't have a finance background, so I had to learn it as I went through in crypto. So the way in the regular world, the way futures generally work are they help an operator that has future cash flows in something hedge the exposure. So if you and I have an airline, and we have future cash, we need to pay for airline fuel in a few months. Futures contracts allow us to hedge that exposure. Or if we're a farmer and we have to deliver our crop to the market in 3 months' time, futures contracts allow us to hedge our price exposure. In cryptocurrency, they started out with more traditional style futures contracts. There really aren't still today that many people that have expected future cash flows in Bitcoin. Maybe miners, but that's a relatively small group. So futures in Bitcoin and cryptocurrency really took off with what's called the perpetual futures contract. I believe BitMEX was the one that at least brought it in. I don't know if they pioneered it, but they brought it into the mainstream. And that is a futures contract, but the future state is like hours away instead of months. So it basically, what it actually means in practice is with a perpetual futures contract, users are able to trade more or less the spot price of Bitcoin and cryptocurrency with leverage. So up to 50x leverage on Kraken Futures and up to 100x leverage on some of the unregulated exchanges.
That's really, really interesting. So if I understand correctly, futures are used mainly to hedge and mitigate risk for people. Is that how it's?
Yeah, and that's the traditional use of it, and that's very much what most of our clients use it for. There is also the speculation aspect of it, which some people use. because trading with leverage does magnify gains and losses. So some people like that as part of a trading strategy.
That's really fascinating, Kevin, because I remember reading about modern day futures trading, and I believe it was the Japanese in Osaka that were just afraid of their rice crops because if the weather went bad, and they were just afraid of not being able to sell it at the price they needed to survive, and therefore futures contracts just blew up in Japan because it was a great way for them to be ready for the unexpected in that sense.
Cool. That's really cool.
Yeah.
And here we are with Bitcoin.
Bitcoin. That's funny how it went to Bitcoin. But just now you mentioned margin trading. Yeah. Do you mind telling my grandma Susie again what is margin trading, why people use it? That would be fantastic.
Yeah, so if you're a trading firm or an investor and you want to gain exposure to cryptocurrency, one of the big determinants is how much leverage you want to take. So if you trade on the spot markets like your traditional Kraken, Coinbase, Bitstamp, you're not trading with any leverage in most cases. You're just buying and selling based on what you actually have, and you pre-fund the account. So if you want to trade with leverage, where if you want to magnify your trading gains and losses or hedge more effectively, you need to take on leverage. And there's two ways to do that. One is margin trading, and a number of exchanges around the world offer this. And that's where you borrow the capital that you're using to trade. So you'll always pay an interest rate on it, and that can be variable on some exchanges. It can be a fixed rate on other exchanges. And that usually gives you between 2 and 5x leverage. Now, the drawback with margin trading is that even if the price stays flat, so let's say you buy in at $10,000 today, a year from now it's $10,000, you have to pay interest throughout the course of that year. So if it's 20% interest, for example, you're 20% worse off than when you started. With a futures contract, if you're trading the monthly or quarterlies, there's no fees. No exchange fees, I think, at any exchange, actually. And if you trade the perpetual futures, you can get up to 50x leverage, and you might encounter what's called a funding rate, which we can go into more detail if you'd like. But more or less, if the price stays flat, your position should stay more or less flat as well. So futures what they allow you to do is have more leverage and also have lower sort of ongoing fees, all things being equal or all things being flat.
That's really fascinating. And so that kind of leads me to another question, which is, as you know, we have stable coins these days, and some people like to hedge, their portfolio with stable coins, although not all of them are really reliable, perhaps. But in terms of a person who wants to use stable coins in futures, what are the pros and cons, if you don't mind sharing?
Yeah, so one of the big uses of futures, I think, across all of the exchanges is people wanting to hedge their price exposure to cryptocurrency. So let's say Bitcoin is $10,000 today and it goes up to $15,000 tomorrow, and you think that's a good price. You have sort of three options for how you can hedge your exposure. One is you can sell it for dollars or pounds or fiat. The other is you can buy a stable coin, like a US Tether or USDC. And the third is you can use a perpetual futures to short. So you deposit your margin and you short 1x. And what that does is it effectively locks in the price of your crypto. So the trade-offs are, some people in crypto don't want to take delivery of fiat for ideological reasons or otherwise. So for some people, they're not interested in taking the fiat. If you take a stable coin, you do have counterparty risk. So everyone treats them as if they're this utility, but there is actual counterparty risk associated with a stable coin. We saw this with the price of Tether moving wildly off $1 when Bitfinex had the legal troubles. So it's not risk-free. You are taking counterparty risk with the issuer of the stablecoin, and for some people that's comfortable. With futures, when you hedge at 1x, you just go 1x short, you are hedging your position and you're only holding Bitcoin. So you do have exchange risk because you have a position open on the exchange, but you don't have counterparty risk in that there's an issuer of this asset. You are still just holding Bitcoin. So some people prefer to only hold Bitcoin, and that allows them to hedge their dollar exposure using futures.
Wow, that was really well explained. Very easy to understand. Thank you so much for that. As it is a very complicated topic, it's great to get it breaking down like that. In terms of, I know that when I looked at your background, you also did market making. You worked in that, and I feel like there's something that I really need to clarify for everyone. Everyone thinks market making is wash trading. Have you noticed that sometimes? Hey, they're market making, the crap out of their token or whatever. And since obviously you're a professional and expert in this field as well, do you mind sharing again with my lovely grandma Susie, what is market making, why we use it, and again, what is wash trading, and why it's a problem, for instance. That would be great, especially as you know, there was a report yesterday saying that 70% of Ethereum was, trading volume on Ethereum was wash trading, 75% for Litecoin, and there's some serious concerns coming from institutional players on that, in that specific field,
Yeah, so I should probably start by qualifying that I'm not a trader. I'm a terrible trader. I shouldn't go anywhere near it. But I did work. I was managing director at B2C2, which is one of the larger market making firms and over-the-counter trading firms in the space. So market making in a lot of the cases in cryptocurrency, it generally means just buying and selling very quickly in and around the mid price. By and large, market makers in cryptocurrency today will do what's called arbitrage market making. So a price discrepancy on, if Kraken goes below Bitstamp, they'll be buying on Kraken, selling on Bitstamp, and vice versa. So they try to keep it more, it actually serves a very good function in that it keeps the prices across the industry, across exchanges, relatively stable or consistent. Wash trading is a different beast, though. So wash trading is generally done, the intention of wash trading is never actually good. So it's always there to mislead or misrepresent something that's happening. So there are a number of exchanges, and I don't want to, it's not right to name names, but there are a number of exchanges that are kind of generally known for encouraging or facilitating wash trading. And the reason they do that is actually kind of interesting. So they try to boost their volume numbers. So wash trading is basically you trade against yourself. So I put in a buy and a sell at the same exact price. It looks like a trade happened, but actually it was just me on both sides, so nothing actually happened. Now, the reason an exchange might want to do that is because they're trying to make themselves look like there's more liquidity. And generally the people they're advertising to tend to be token issuers. So they're trying to bring on traders, yes, but they're actually really advertising as well to, if you and I have an ICO token, come listed on this exchange. Those tend to be the audiences of people that the exchanges are going after, because there's fees associated with token listings.
Yeah, it makes a lot of sense. So I was just watching a presentation the other day with the guys from Crypto Compare, and according to their study, out of 10 of the top 10 crypto exchanges by trading volume, only one was legitimate. So 9 were basically were just going through wash trading and obviously fake volume in that sense. So
yeah, and I think it generally correlates with if the exchange has good fiat rails. So if the exchange like Kraken, Bitstamp, Coinbase has good, stable, reliable fiat rails, like you can buy and sell dollars, and the volume is almost always just 100% real. It's when it has like doesn't have fiat rails, or it's more difficult to get money, like traditional money in and out. That's generally an indicator that there might be or at least those are the ones that are more predisposed to engage in wash trading.
That'll make a lot of sense. So just quickly going back to market making and wash trading, would this analogy work? It might be a bit crazy, but I was thinking that for market making, it's more like you want to make sure that if someone wants to buy, so if you're playing ball, there's one guy on the other side waiting to catch your ball or throw the ball to you. While wash trading is more just people from the same team throwing the ball back at each other. Back and forth. Is it
yeah,
more
I guess so. I guess so.
Trying to overly simplify things doesn't work always.
Yeah, market makers in the traditional world will generally have an arrangement with the exchange where they're required to have orders at a certain level, a certain set of levels beyond just mid. And that exists in some capacity in crypto, but it's relatively less. A lot of the people in crypto that call themselves market makers are just proprietary trading firms that trade high frequency across a number of exchanges. So in many cases, they're not engaged or explicitly paid by the exchange. They do it for their own profit, and in so doing, provide a service to the ecosystem of price discovery across exchanges and making sure there's fewer arbitrage opportunities.
That's really interesting because so there are different forms of market making.
Yeah.
Because I remember like when you had MPOs back in the day, it was kind of like the ball analogy. Like if people wanted to buy the price post IPO, they just wanted to ensure there was liquidity.
Yeah.
And so therefore they would either take one of the stances, either the buy or sell. But as you said, people do market making for their own benefits too.
Yeah, in crypto, almost every market maker is trading with proprietary capital for their own profit. So
That's really interesting. And in terms of institutional sentiment, obviously the BAAACK launch recently hasn't done really, really well. Everyone's thinking, oh, Bitcoin to the moon, et cetera, et cetera. But from your impression now that you're with Kraken Futures, is there truly demand for institutions, or are they still kind of, in the shadows somewhere?
Yeah, I think so. The big litmus test for whether institutions are interested or not, in my view, or in my experience, because I've engaged with quite a few of them, is whose money are they managing? So if they're managing their own money or what they view to be their own capital, they're generally in or very close to being in. So a lot of the high frequency trading firms, a lot of some hedge funds are already invested with sort of partner money. But if you're managing someone else's money, pension funds, insurance funds, asset managers, they're still a pretty long way away from it. And it makes a lot of sense from their perspective, because if you're an asset manager in Bitcoin and you invest your client's money in Bitcoin, it does very well, you get a slightly bigger bonus because you perform well. But if you invest your client's money in Bitcoin and it goes to zero for some reason, you're probably looking for a new job because you've taken an unnecessary risk with client money. So the dividing line is it your money, or is it viewed as your money, or are you managing money on behalf of somebody else? And I think it's a very, very long time before we see people that manage on behalf of others beginning to participate actively.
Oh, that's really, really interesting. Just a few minutes earlier, we were talking about altcoins just briefly. And I have to ask you this, Kevin, because obviously Kraken offers Bitcoin and altcoins. And as you know, when Bitcoin dominance went over 70%, everyone was like the death of altcoins, very negative stance on, it's worthless, etc. I would love to hear your angle and if you still believe in altcoins, if there is a future, and will it qualify as a new asset class?
Well, I have to be careful because the present company, I think you guys have a token, right?
Oh, yeah. That's right. Yes. But you can be honest. Is it okay? Yeah. You can be entirely honest, please.
So I think it depends a little bit on how you define altcoins. So if it's a utility token within a controlled environment, I think those have value, but those have always had value because they're tokens within a controlled environment. I think as you think of, if we look at altcoins in the definition more of decentralized cryptocurrency that has similarities to Bitcoin, I don't actually know that, well, the lens I would look at it through, or do look at it through, is the only reason you would decentralize something is to provide censorship resistance. So in every case, a centralized entity or organization is going to be faster, it's going to be more efficient, and it's going to be more responsive to customers. So like Netflix versus torrents. Yeah. Netflix is faster, it's a better customer experience, it's just better. The only reason you'd want to do it in a censorship-resistant way is if somebody might want to censor the thing that you were doing. So torrents, for example, and they're censoring the fact that you've stolen the movie. So Bitcoin makes sense to me as a decentralized entity because it's censorship-resistant store of value or transaction mechanism, and the thing that the people might want to censor those transactions for, better or worse. It's not obvious to me why a lot of these other applications need to be decentralized. So, for example, the DeFi movement, this decentralized finance movement, in principle, it's cool, and they might have great innovations and it might evolve, but if you look at it through the lens of the only reason you decentralize something is to provide censorship resistance, well, then it raises the question, who's censoring lending and borrowing today? Those are actually quite efficient markets in the regular world. So it's not obvious to me that you need a blockchain or you need a decentralized system to solve for that, because no one's really stopping anyone from borrowing or lending today.
Yeah, that makes a lot of sense. That's a really good point. So utility tokens and altcoins in terms of decentralized infrastructure are quite different. You view them differently in that sense. That's really cool. In terms of, obviously, you're working for a crypto exchange. How do you feel about the exchange tokens as an asset class? Would that be one of the utility tokens in a controlled environment, like you said, that has more or less value or potential?
Yeah, so if we look at Binance token and Leo, I think those are very much tokens that exist within a controlled environment. I don't even think either exchange advertises them as decentralized cryptocurrencies. I think Leo is actually one of the coolest innovations in the space in quite some time. And it's not because I particularly like Leo or have a strong feeling about it in and of itself, but the structure they've created is really, really cool, the incentives they've put together. So if you look at the ICO model, it was really about people raising capital for a project or for a business. And the problem was there was no legal or social contract between the person that invested and the business that received the money. And you're seeing that play out today with Kin and all these ICOs where the people are just running off with the money, or they're exploding and bad things are happening. So that was sort of version 1.0. If you look at version 2.0, I think Binance started to do it with the BNB token, where they said, we're going to put future cash flows towards buying back this token. But if I understand BNB correctly, they actually buy it out of their treasury as opposed to buying it on the market. So one of the things I really like about the way Leo is structured, and again, I have no real feeling about the token in and of itself, but the way they've structured it is quite innovative, because they've now committed to put 27% of future cash flows against buying back this token on the open market. They've also solved for what happens in the event of a liquidation event. So they've said if we get the hack money back, or if we get this $850 million back, I think it's like 80% of the money will be used to buy back the token at market rate. So they've now started to create at least a social contract that is somewhat auditable, because the cash flows of Bitfinex are relatively transparent if you know that the fee structures are transparent, where you're now tying the future cash flows of the business to an investment today in a token, and it solves for things like liquidity events as well. So I think that is maybe version 2.0, and there'll be many other iterations, but I think we're getting closer to a new way of raising capital, and something that starts to resemble what the security token model tried to do, just in a I think, a more innovative way. So I'm a big fan of what they've come up with there.
So you
structurally.
So you really like the fact that these future cash flows can buy back a token, burn it to reduce the supply on the market. That's one of the cool features in terms of token economics.
Yeah, and putting aside completely whether it's legal or not, because I would be pretty surprised if it was. But just in abstract, yes, I think that's really cool. Because what you've done is you've tied the investment today to the future cash flow of the business. The more money they make, the more they'll buy back, and that will drive the price of the asset up. So I think it's the first iteration of it in a real way, and I think it's actually pretty cool.
That's very, very cool. And so
putting aside whether it's legal, I don't know if it is or not, but yeah, in abstract, it's cool.
So you were talking a little bit about security tokens, whether these type of tokens, are they utility or securities within, of course, different jurisdictions. There'll be different rules applied, but do you see Kraken or are these exchanges eventually having security tokens on a platform and creating this secondary market of liquidity that everyone dreams of? Because as you know now, we have lots of issuance, but we don't have much secondary markets for trading security tokens. Is that how you see the future, or how do you see the future of crypto exchanges in general? I know it's a very difficult question.
As it relates to security tokens, I can't speak for Kraken at all. I have no idea what their plans are. But I think in general, I would be very surprised if they continue forward the way they are. Because what they've done is more or less, as I understand it, copied and pasted traditional security models on top of cryptocurrency. In 2014, they tried to do that with gold issuance. They've been trying to do that with other things where they just take it, they put it on top of crypto and hope it takes off. And it almost never does. And the things that do take off resemble the past but look different, which is why I think the Leo type issuance is it looks a lot like a security offering, but it is different in some ways, and I think that's where it'll likely go. The exchange space, more broadly, it's really difficult. I think the spot markets are more or less, the market shares at least have stayed more or less stable for the past year or two, so it's difficult for one exchange to gain outsized share over the other, unless, of course, there's a catastrophe or if the market grows. So I think a lot of the exchange operators are waiting for the market to grow, because it's very, very difficult to grow it organically or steal share from somebody else. So I think the futures market's still pretty wide open, which is what's exciting about Kraken Futures. But I think the exchanges more broadly, we'll see what the market looks like after the next, if there is another sort of wave of adoption, we'll see what the market looks like. I think it'll be quite different than today.
So recently, Kevin, one influencer that I love to follow on Twitter is Raoul, and he just posted something saying that Bitcoin is the best performing asset in the history of financial markets, and said that even as today, it has gone up 25 million% since its actual creation. So he was like super enthusiastic about it. But I would just love to hear from you, like, what is your stance on Bitcoin as of today, and what makes it, if it is attractive to you, what makes it attractive?
Yeah, I think the asterisk on that tweet is that it started at zero.
Yeah.
So anything is 25 million% if it started at zero. But I think Bitcoin is a really cool place right now. If you looked at it from sort of 4 or 5 years ago, I remember being around the industry, and the biggest concern for most operators in the space was that it would be made illegal, that the governments of Europe and America, generally speaking, because those are the people that talk to most, would say this is illegal, you have to stop doing it, and you can't operate these businesses anymore. And that was a real threat to the entire industry. And what's happened that's been very encouraging over the past few years is the governments have legalized it with regulations. And I think a lot of them are actually very sensible, or at least best effort regulations to try to control this thing while still letting it grow. But I think we're at a state now where I would be very, very surprised if the US or any major European government came out and said, guys, no more, it's totally illegal, you have to stop doing what you're doing right now. So when you take the regulatory risk off the table, You're now left with technical risk, of course, that the blockchain could explode or something could go wrong. But that's also relatively small, almost 10 years into the game. So I think, if we look at Bitcoin where it is today relative to where it was, I think it's one of the most exciting times, because you've taken regulatory uncertainty off the table to a large degree, and you've taken the technological uncertainty. So now people are able to invest in building on top of it, and able to invest in trying to integrate it into their lives a little bit more. So I think the next 10 years will be very, very interesting.
Yeah, that makes a lot of sense. And I guess even if people do try banning it, it doesn't really work. We've seen what happens in China. We've seen what happened in India. People still end up going OTC, flying to Hong Kong. And where there's a will, there's a way, no? As
absolutely, you say? Absolutely. It's incredible the markets that have sprung up around the world to meet that demand, even if the country does ban it.
Yeah, a lot of people are always saying, yeah, but what if the government's ban it? Unfortunately, they could limit the cash outs. The Fiat gateways, but that's about it, isn't it?
Yeah, and then people can go peer-to-peer at the end of the day.
They can go peer-to-peer, which was, I guess, Satoshi's original intention.
Exactly, yeah.
And if you don't mind commenting, you just said earlier in the very beginning of the interview, you talked about Lightning nodes. You're running Lightning nodes as of today?
I did for a while, back in about December, and I didn't really know what to do with it. So I got it up and running, and I was like, yeah! And then there's not that much to do. You could feed a chicken, and you can draw on a wall. And then when you've done those two things, there's really not much else to do on the Lightning Network. So I think it's a massive step forward for the space and a very interesting new technology. But the Lightning Network today is a lot like Bitcoin was in 2011, 2012. It's difficult to use. It's not obvious who will use it. But I think the people that are working on stuff in this space are some of the smartest in the industry. So it'll be very interesting to see what comes out of it. And if they do launch stuff, I'll keep trying it because I think it's fun.
Yeah, a lot of people are telling me the same thing. People running nodes here in London, they say the user experience is not good. However, they're able to transfer 1 BTC at 12 cents rather than the usual $1.
Yeah, it's not obvious who has that need because not a lot of people actually use Bitcoin, but it certainly can be done, so it'll be interesting to see.
Kevin, this has been so useful in terms of understanding the fundamentals of futures and margin trading, market making, wash trading, some really critical things that we need to understand in the crypto space. So thank you so much for your great wisdom. If we want to follow you, what is the best channel to connect with Kevin Beardsley?
First of all, thank you very much for having me here tonight. It's been an honor to be part of this, and I really appreciate your time. Best way to get me is on Twitter. It's at Kevin H. Beardsley, Beardsley. So just at Kevin H. Beardsley, my full name, and you can always get me there.
Fantastic. Thank you so much. And for those who are watching out there, don't forget to comment. If you have any questions for Kevin, please put them in the comments below. We'll try to respond as soon as possible, and blast that bell notification so that you get access to all these timeless interviews. Thanks again, guys, and see you next week.